here's a thing. The consequence of a potentially extended lockdown ad infinitum and the summer months usually results in people doing outdoor activities. That was certainly the case last year. Now, JD Sports, which is a sports clothing and equipment retailer on the high streets and in every mall across the United Kingdom, has been actually doing really well over the last few months, and its stock's been going up. It did originally go down when all the shops closed down, but as soon as shareholders realised that there was a huge online market and that those people who had no chance of going retail therapy or visiting other closed indoor spaces took to the outdoors and started doing sports. Look at the amount of cyclists and tennis players that were around last year. I can remember in the middle of summer last year it was virtually impossible to book even a public tennis court for weeks in advance. So there is certainly an increased market in sports clothing and sports equipment. So JD Sports has actually just recently bought Spanish retailer DeporVillage, which is a very similar type of operation on the Spanish market. The company paid £120 million for it just now in a recently announced deal. So the idea of this is to increase the online presence of the company on an international basis. Now, you would think that that would be a good move, and I'm sure it is. However, share prices in JD Sports actually gone down 1.3% this morning. Very interesting indeed. So it rode a wave of online popularity, then sought to increase its online presence and go a bit more global. Share prices went down. Who would have thought?